don't yields go up when bond prices go down when people are selling them? Yeah, so there is an inverse relationship. The bond portfolio of TLT typically does go down when bond prices go up. But that's not a healthy thing. So if you are sitting on a bond portfolio and yields continue to go up and what you get paid is 4.1 now, but current bonds getting paid 4.6, you're losing money. Your bond portfolio is sucking wind. So the TLT is actually an ETF made up of bond portfolios. It's a bond portfolio. So typically when you see yields go up, the TLT goes down. And so that is inflationary, it's recessionary, it's not a good idea. It's not a good outcome for the markets to see yields going higher and higher. The banks like it because they get to charge more, but ultimately it's not a good indicator. When you see yields going higher, that puts a damper on home builders. So ITB, XHB, and all those companies inside here like Lennar and Toll Brothers and such. They do not do well because they're gonna wait for yields to come down. They're gonna wait for rates to come down. So if they're waiting, they're not building. And if they're not building, they're not growing. If they're not growing, the industry goes down. That's bad for the economy. That's one example. So we do have a short on TLT. So let's just talk about that first. What happened to the Tesla fly? The Tesla fly, Big G. If you understand what happens with strikes, Tesla has moved up, and that butterfly that we put on a few weeks ago is way out of the money. So it will obviously expire worthless. There's nothing to do with it. Now we've put on some other trades in legacy on Tesla, where we're shorting it from the levels that it's at now. But there's nothing to do with that butterfly. Yeah, PCE numbers coming on Friday. Yeah, I don't know how much impact that will have. If you looked at what happened with PPI and the CPI numbers, it didn't really move the markets much at all, did it? So let's talk about the trade that we have on TLT. So the initial trade that we put on, yeah, so I wrote in one of my alerts here on 5/21, around here, the bond market, or down, probably down here, the bond market is in trouble, and I think yields could go higher. If yields go higher, TLT will drop further. This is TLT here. That's the setup for the trade. So I took a pilot position for June 20th. We did the 83 half. You can look at this. You can scroll up and see this in the alerts. You can type in the search bar there, TLT, hit return. It'll pull up all the alerts with TLT in it. This was the trade, the 83 half by 81 put debit spread for 80 cents. 80 bucks to make 250. Pretty good risk reward, right? So that was one thing we did. And 6 days later, which would have been yesterday, I decided to add to the trade as we got a little bit of a pullback over the last few days in yields. Well, a pullback in yields would mean what? Move up in TLT. That makes this a lot cheaper. So I was able to get this same trade for 36 cents. So I added to the trade and averaged down. So you can see here, oops, 58 cents, right? Is that right? Yeah, 58 cents. So now the trade that cost me 80 cents, I got a little bit more of it, and now I'm in for 58 cents with the potential to make 250. That's a nice risk reward. I liked it. Not only that, I added some 84 puts. They were only 74 cents, right? So I have the 84 puts and I have the 83 half 81s. So just to share with you what we did in Legacy last week, another way of taking the trade, reducing risk. What I did was I sold, this was last week, I sold the 83 puts for last week, 5/23. And then I bought the 80 puts. It's not really a calendar. It's more of a, I guess you'd call this a diagonal. I bought the 80 puts for June 20th. Now, these 80 puts were kind of expensive. I didn't want to pay how much they were. With the movement of TLT going higher and higher and higher initially on this pullback, I thought, well, we can hold on, right? So as long as we stay above 83, like right here, then these puts would expire worthless, but I get to keep the credit that I got. So if I take the credit that I got for the 80, selling the 83 put and applied it to the 80 put for June, my net cost of the trade was $29. So as soon as this put expired worthless, I get to keep the credit against the $80 put. My net cost for the $80 puts was 29 cents. So I've got a whole bunch of 80 puts on TLT for June 20th, just in case, yields pop again, for 29 cents. That's a good deal. It's a good bargain. So that's what we did on TLT. And we added some things on it, but and part of the reasoning for that is we're in such a volatile market at the moment that it appears as if call and put prices are so expensive. And so one of the things that I like to do is I like to create a credit scenario for the short week, like for this week. Give me a credit. Let me put a trade somewhere here, get a credit. Price won't get there. This will expire worthless. I keep the credit, and then I can use that to buy the trade that I want. So I'm lowering my cost by doing these kind of scenarios. We did it on Tesla today, and we did it on TLT. So that's the TLT trade.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.